Did you know that Rivian, the electric vehicle manufacturer, is making waves in the automotive industry? With recent developments and a significant upgrade from UBS, there's a lot to explore about this company's future. So, let's dive into the fascinating world of electric vehicles, understand the factors driving Rivian's upgrade, and uncover its journey in the EV industry. On October 10, 2023, Rivian's stock experienced a significant shift. UBS, a prominent financial institution, upgraded their assessment of Rivian stock from neutral to buy. To break it down in simple terms, this upgrade essentially means that UBS, through their analyst Joseph Spack, believes that Rivian stock has become a more attractive investment opportunity. In addition to the upgrade, they adjusted the price target from $26 to $24. Think of this price target as a suggested price range that investors might consider paying for Rivian stock. The driving force behind this upgrade is an improved risk-to-reward ratio. In other words, UBS sees greater potential for the stock to yield positive returns, and this makes it an appealing choice for investors. Rivian faced some challenges in the weeks leading up to the upgrade. Their stock had taken a hit, dropping by approximately 20%. This decline came after Rivian announced a $1.5 billion convertible debt offering. But here's the interesting part. UBS views this dip in the stock price as a buying opportunity for investors. It's a bit like saying, when there's a sale on a product, it's a great time to buy it. UBS believes that Rivian's improving fundamentals outweigh the recent setbacks. Joseph Spack, the UBS analyst, also provided some promising insights. He mentioned that Rivian is expected to produce about 54,500 vehicles this year, and there's potential for this number to increase when they announce their earnings on November 7. It's a bit like saying, they plan to make a certain number of products, but they might actually make even more. This is good news for both the company and its investors. Furthermore, Spack has confidence in Rivian's ability to achieve positive gross margins by the end of 2024. Positive gross margins mean that they'll be making more money from their vehicles than they're spending to produce them. This is like a green light for the stock to grow. Rivian's long-term prospects look promising for a few reasons. First, they are well-positioned to benefit from labor cost advantages resulting from recent labor strikes in the automotive industry. It's like saying, because other companies had some issues, Rivian can save money and do better. Additionally, Rivian plans to introduce a more cost-efficient R2 platform in 2026. This platform is expected to generate even more profits for the company. It's like they're planning to make a product that's more affordable to produce, which will help them make more money. Now let's shift our focus to the broader electric vehicle industry to understand where Rivian fits in. Rivian Automotive, an electric vehicle manufacturer, plays a significant role in the dynamic and ever-growing electric vehicle industry. This industry is all about making vehicles that run on electricity instead of traditional fuels like gasoline or diesel. On October 10, 2023, Rivian's stock performance was quite notable. It opened at $19.34, and throughout the trading day, it had a price range between $19.11 and $19.98. This is a bit like the price of a product changing during a sale. It went up and down, which is pretty common in the stock market. The stock also had a trading volume of 14,05,584 shares, which indicates how many people were buying and selling Rivian's stock. In terms of the company's size, Rivian has a market capitalization of $17.9 billion. Think of this as the total value of the company in the stock market. But Rivian faced some challenges in the previous year, with a decline in profitability. However, things have been looking up this year, with earnings growth of 14.80%. Earnings growth is like the company's way of making more money. Looking ahead, the company's projected earnings growth for the next 5 years is estimated at -36%. This figure suggests that they might not make as much money in the coming years, A net profit margin measures how much money the company keeps after all its expenses. In this case, it's showing that they spent more money than they made, which isn't great. One interesting thing to note is that we don't have data on Rivian's competitors, which makes it challenging to compare how well they're doing in the industry. However, Rivian operates in a highly competitive market within the consumer durables sector, specifically in the motor vehicles industry. This means they're in a tough spot where other companies are trying to make similar products. Investors and analysts are eagerly awaiting the next earnings report, scheduled for November 8, 2023. It's like waiting for a report card to see how well they're doing in school. Let's talk about some numbers that can help us understand how Rivian's stock is valued. The price-to-sales ratio is 10.15, which suggests that investors are willing to pay a premium for each dollar of the company's sales. In simpler terms, it's like saying people are willing to pay a bit more for Rivian's products. On the other hand, the price-to-sales ratio is 1.27, indicating that the stock is trading at a relatively low multiple of its book value. Think of it as the stock being on sale compared to what's written in the company's books. On October 10, 2023, Rivian's stock had a modest performance. The company has shown strong revenue growth in the past year, but its profitability remains a concern. Investors are closely monitoring the upcoming earnings report to assess Rivian Automotive's progress and future prospects within the highly competitive motor vehicles industry. Now let's dive into more recent developments. Rivian has been creating quite a buzz in the stock market. A consensus among 25 polled investment analysts suggests that investors are optimistic about Rivian's future prospects. These analysts are essentially experts who study the stock market and make predictions about which stocks are good to buy. Rivian's stock closed at a price of $19.83 on October 10th. However, what's more interesting is what the analysts have to say. They're making predictions about where the stock might go in the next 12 months. The median estimate among analysts is $29, with a high estimate of $44 and a low estimate of $15. It's like asking a group of people what they think a product's price will be in the future, and they've come up with different answers. But on average, they expect the stock to go up by around 46.28% from its current price. That's a big increase, but there's a bit of a twist. In the current quarter, Rivian reported earnings per share of minus $1.38. That's like saying they didn't make a profit in the most recent period. However, they also reported sales of $1.3 billion. Sales are like the money they're making from their products. And this figure suggests that Rivian is gaining traction in the electric vehicle market. It's like saying, people are buying their products, but they're spending more money than they're making right now. Investors and analysts are eagerly awaiting Rivian's next earnings report, scheduled for November 8. This report will provide further insight into the company's financial performance and may influence the stock's future direction. It's like waiting for your report card to see how well you did in school. The current EPS forecast for this quarter is minus $1.38, which means analysts are expecting a similar loss as in the previous quarter. In conclusion, the future looks bright for Rivian Automotive Inc. With positive analyst forecasts, a consensus buy rating, and strong sales figures, the company is well positioned to capitalize on the growing demand for electric vehicles. Investors will be closely watching the upcoming earnings report for further confirmation of Rivian's success in the market. Shares of Rivian gained 4% following the UBS upgrade. Despite a recent stock plunge and a decrease in the price target, there's optimism in the air. The new price target suggests a potential upside of over 27% from its recent close at $18.78. Rivian's recent challenges, strong sales, and ambitious production goals make it an intriguing player in the electric vehicle market. The upcoming earnings report will provide a clearer picture of their financial health and future prospects. While there have been ups and downs, Rivian's journey is far from over, and we'll be keeping an eye on their progress in the electric vehicle industry. We hope you enjoyed this video, and if you did, please don't forget to like, share, and subscribe to our channel.